So the federal government just raised the interest rates once again by 3/4 of the point. What does this mean to real estate? Well, on a negative part is interest rates are now up to as high as 6.75. So this is more than double than what we had in March. Okay, so this is the biggest, fastest increase that we've seen. How is that impacting real estate? Well, there's a couple things. We are seeing sales reduced by anywhere between 28% to 34%. So speaking about Southern California, whether it's San Bernardino County, Riverside County, San Diego County, LA County, Orange County, we're seeing a decrease in sales year over year by anywhere between 28 to 34%. So that means there's less sales of homes going on. What's going on with prices? Because this is the most interesting part. Year over year, the median home price has actually increased. Sales are down. Some might believe or make the assumption that the sales price is down, but not just yet. I think it's too early. A lot of people call for my advice. Juan, what should I do? Should I buy now? Should I buy later? Here's what's going on, especially with this new rate hike. I see that if you're a buyer, this is a tremendous time to enter the market, and for a couple reasons. One, there's less competition. You're going to be in a position now that you could actually offer less than what is being offered. You could be a little more aggressive on your pricing. You could also request repairs or credits if the property is not in the condition that you need. This was something that for the last 3 years as a consumer, as a buyer, you didn't have this right. What I'm seeing right now in the market, a lot of the properties that I'm selling or that I'm in escrow on, buyers are asking for significant price reductions. So what does this mean? Someone's in escrow, they're not certain about what the future holds in terms of our economy, in terms of the recession, in terms of interest rates, politics, all these things. They're uncertain, so therefore they want to hedge their bet. So they kind of want to protect themselves. That's another word. I want to protect myself as an investor. We have a lot of buyers right now, and I'm going to use the word maybe asking for larger discounts while in escrow or simply canceling the escrow. So although I said that the values are not down yet, I do believe that this last quarter and most of 2023, it's going to be very, very favorable for a buyer. I do expect for prices to drop, and I expect that the negotiation leverage, the power, is going to twist over from what's historically been on the seller side, and it's going to go over to the buyer. The buyer can make more demands now than they've been able to do before. And I think this wasn't the case, again, for the last 3 years. And so if you're a consumer, if you're a buyer, I see a lot of investors being excited about what's going on because they believe that they're going to be able to maximize on what is going on in our current economic state. And they believe that by maximizing it, they're going to get a better price, a better return, and put themselves in a position to win. Now, another thing to know, if we go back 30 years and we take the historic average on interest rates, 6.75 is actually still below the historic average. So it's still not even that high. Some buyers out there are gravitating towards what's known as a variable interest rate. And what that means is that banks and lending institutions are going to give you a better rate than the 6.75, maybe anywhere between 4 to 5%, which is lower. But then they're called variables because you're going to get them for a short period of time. It could be anywhere from 5 to 10 years. But if I'm an investor and if I could secure a variable loan, the longer the better. That's my recommendation. The longer the better. 2 years, a little bit scary. 5 years, 7 years, 10 years, much better. There is several banks offering a variable note, meaning that your interest rate will be much lower for the first 10 years. I believe that that gives you enough time for the market to work its cycle for you to still come out ahead, having a lower payment through these next 10 years. And then I believe that we'll be in a better position come 10 years from now. You could then refinance the property anytime in between where you see a drop in interest rates. And so I do recommend that. The risks involved. I traditionally would tell every investor, based on my experience, you're better off having a 30-year fixed loan. But in this case, to make the numbers work, to buy the right property at the right price, to negotiate it properly, if it takes a variable loan, I 100% would support that. So if you're an investor looking to do so, please reach out to us. We're in Long Beach. We service the local area. We would love to work with you. We're going to put you in a great financial position on your next investment.